Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so this article came out of Realtor.com. Home prices are finally falling. How low will they go? Eventually, in the article, it gives the number. The year-over-year, peak to trough price decline.
Right. So I'll give you a hint. If you were doing the limbo, you can easily clear this post.
This post. Okay. Yes. Here's the first important quote from the article. But now that home prices are finally coming down, just how low will they go? That's the million-dollar question for frustrated home buyers, worried sellers, and homeowners who would prefer that their home values continue rising.
So what's your number? Put something in the comment. We want to know.
We're going to tell you after we read the next comment.
Right, and then we'll tell you in a moment. So please, don't forget to subscribe and hit the notification bell. We'd appreciate it. And like the video, but leave us a comment real quick and tell us how low you think they'll go. Okay, Let's go.
Okay, and what we want is, remember, they peaked a year ago.
Yes.
And this is the year over year. This is the thing everybody's been frothing at, the year over year. Because remember, we had 123 months consecutively of year over year price increases. Mm-hmm. So it just ended. And this incredibly massive drop in real estate values that we're going to give you here in a moment. Okay, here's another quote from the article. However, housing professionals don't expect any steep drops that will provide house hunters with much relief. Despite higher mortgage interest rates, there are still legions of would-be buyers in the real estate market competing for an extremely limited number of homes for sale. Let's talk about the extremely limited number. Inventory is literally the lowest it's ever been.
Right. So inventory is really low. And for those of you that say, hey, it doesn't really matter because nobody can afford the houses out there, not so fast, right? So first of all, there are people who can afford them because people are buying homes, whether they're buying cash or they're getting a loan. Houses are being transacted. The issue out there is, of course, a lack of inventory. And that lack of inventory is kind of cuts two ways. First, lack of inventory as far as just sheer numbers. And then the second part is lack of desirable inventory, right? That's really the big one. Because yes, everybody can say, well, this house has been sitting on the market for so long. Well, yeah, but it's a wallflower, okay? This is not a house that people want. That's why it's still sitting there. In order to get that house moving, it's going to have a more attractive price for what you're getting.
Okay, here's a quote from Realtor Chief Economist Danielle Hale. Most likely, we'll see a little bit of decline followed by some months of subpar growth. I don't anticipate double-digit price declines. I expect prices to mostly move sideways over the next year or so. A year ago, we predicted an adjustment, moderation in prices. Mm-hmm. People were predicting a 40 or 50%. The peak of the highest that prices reached, Juana, a year ago. How much we're going to give them the number now that they put in the comments. Okay. How much is it down?
Oh, a lot. 0.9%.
0.9.
And keep in mind
0.9%.
Right. So this is nationally. So I want to kind of really give you context because I think context is really important. So 0.9% nationally, and this is against places in the Northeast like Cincinnati and Hartford, Connecticut that had 17, 15% price increases.
Miami
that had price increases year over year. So when you put those against other places that had price decreases, nationally we are at less than 1%. So it matters where you are, right? Location, location, location. Not only that, but we've talked about this before, it matters just from one community to another within the same zip code, even sometimes from one block to the next in the same neighborhood. So it is about location and desirable homes that are desirable, homes that have a good location. Maybe they're near parks or in a good school district or are turnkey. Those homes sell. Not only do they sell, but a lot of times they sell for either full price or have multiple offers. So that's an important thing to keep in mind. Here in Vegas, we're selling homes at 97% of asking price. That's pretty darn good.
Yeah, we just had a home sale in the neighborhood that sold for more money than it would have sold for a year ago.
Mm-hmm.
So it's neighborhood specific, zip code specific.
Right.
And with that is the next quote from the article. Even though prices might be falling nationally, they're not going down in every market or for every home. In some parts of the country, prices are shooting up and the most desirable homes continue to receive multiple offers. True story. I know this person that made an offer on a $3 million second home vacation home, and it sold in less than a week with multiple offers.
Right. So it happens, and it happens at all price points. And what's interesting, I think, to note is that the price points that are seeing the greatest pressure are actually both ends, not the middle, but both ends. So there are not enough homes at the low end, and there are not enough homes at the top end. So I think that's an interesting thing.
Realtor.com predicts a small decline similar to the 2% year-over-year drop expected by NAR, but while Realtor.com expect prices mostly flatten out next year, NAR foresees them rising by about 3% this year, 2023.
Right. So, lots of different organizations and experts have taken out their little spinners and they've decided how much homes are going up by or down by. And, I'm sure that they all have their wonderful justifications. But at the end of the day, you, the consumer, are going to get to decide what the real estate market does.
Let's talk about this real quick because this is interesting. You didn't buy a home last summer or in the whenever because you were waiting for the crash, because you were told you could buy your house, the same house you had, so you sold it, and then you went and moved into a rental. Now you're not getting a mortgage tax deduction. You're not getting
property tax deduction. You're not building equity because you're not making your payment. Some of that goes to principal reduction. It's just all gone. And, on average, your home's down 0.9%. Now, remember, it cost you 8% probably to sell the house. Realtor's fees, closing costs, transfer taxes, things like that. So you basically took a huge bath. You can't even buy your house back for what it cost you to sell it. Right. So
for
interesting.
Like 99% of people that sold their
Right.
sold their house. And I think that's the problem with trying to time the real estate market. There are people out there, like we just mentioned, someone, right around the corner's got their, basically $1 million house that it wouldn't have been $1 million a year ago, but you can't really time it. You can't say, I'll just wait. This is a good time. So.
Right. And for us, it's the highest sale in our neighborhood.
Okay, this is an interesting one, I thought. Mark Zandi, chief economist at Moody's, anticipates a larger, more prolonged drop in prices. He predicts home prices will fall 8.5% over a 3-year stretch.
Wow.
From the peak last July through early 2025, buyers shouldn't expect big price cuts at the lower end of the market. So that means lower priced homes, where the competition is greatest for a very limited number of more affordably priced homes. So he's saying prices drop 8.5%, but if you're in the bottom half, they're probably not going to drop at all. Right? So if you're going to buy that starter home, investment property, waiting 3 years probably won't matter. But here's the thing. First of all, he's the chief economist at Moody's. Isn't Moody's the same people that gave the housing market the AAA rating back when it was all junk? All these subprime loans, AAA. Was he the chief economist then? Because that was a pretty bad decision. Right. But even if it does, even if you knew it was going to fall 8.5%, that's what it cost you to sell. Right. Why even sell it? Just keep it.
Yeah.
Because it's not like a stock that costs $0 to sell. If you knew a stock was going to drop 8% in a year, you would sell it, and then a year later you would buy it back. But you have transaction costs, and then a stock doesn't earn equity. I think one of the problems with housing is it's more complex, and then people try to compare it to the stock market, that it's volatile. And they're trying to figure out why housing market hasn't crashed 40 or 50% when it's up 40 or 50% in the last 3 years.
It's a much more complex market.
Okay, here's another quote. Most experts don't expect prices to revert back to 2019 or early 2020 levels. Adds Wolf, it's important to keep a home price correction in context. We experienced a historic run of prices. A 3 or 5% drop is not catastrophic.
Right.
especially if they just went up 40%.
Right.
Really, honestly, the winners here are the people who bought 2019, 2018, like every year back, bigger winner.
Yes, that's true. But that doesn't mean that if you don't own a home, there's no hope for you. There absolutely is.
Yeah.
So we're going to go through that.
Okay. Here's what they say the tipping point is. If mortgage rates were to fall below 5%, that's considered to be the tipping point. More sellers would likely put their homes up for sale, and there would be an increase in buyers in the market. So they're saying if rates go below 5, home prices start going back up again. That the only reason home prices are not going up is because of interest rates, even with the low supply. But we know for sure that in areas where there's really low supply, home prices are still going up.
So I respectfully disagree with that position. So my position is that if home interest rates go down to anywhere in the 5s, like even in the high 5s, I think you're going to see lots of people flood back into the market, and you're going to see home prices being pushed up because of lack of inventory. Because of course, the more buyers you have chasing fewer goods, in this case fewer homes, the more competition you have. So when you have multiple offers, you're going to have prices go up. So I respectfully disagree as far as that goes. Now, if home sellers come back onto the market, that might help, but I don't see enough home sellers coming back to the market and putting their homes on the market in order to feed the market enough to have any sort of downward pressure on prices.
And here's the sort of thing that validates that from the article. That extra demand and the ensuing bidding wars and offers over asking price would be likely to push prices back up again. So, there is this, the thing that people are missing is that we have this massive buildup that's happening. It's the shadow inventory of buyers.
Exactly.
Forget the shadow inventory of these the millions of foreclosed homes that have been foreclosed and the banks are holding on to them. They don't exist, guys. They don't exist. No bank. You can go pull any of the financial statements. Nobody has any REO or bank assets on their portfolio. They just don't have them. What's going to happen is there's going to be a lull. As you just saw from this article, the worst case scenario is they're predicting 2.5% to 3% per year decline, but then there's people predicting 3% improvement in home prices, an increase. So we've got this plus or minus 3% for maybe the next year or two. But what's going to happen is whenever the interest rates drop again and money gets cheap and home price is going to explode again. Like literally, we said that the interest rates, all it would do was stop it. It wasn't going to crash it.
Right. So we want to know from you, what is the tipping point as far as getting sellers to come back on the market? I think that's really the really important question is, what's the tipping point that will get sellers back on the market? So leave us comments and tell us what you think. I think that's an interesting conversation to have, so we'll have that in the comments with you guys. We appreciate you participating in the conversation in the comments. We're very grateful for you. Please subscribe, hit the notification bell, like the video, share the video, and please, it's really important that you share the video so that we can grow our subscriber base.
Yeah.
We'd like that. So thank you for watching, and we'll see you on the next video. Bye.
Bye.